Still on transfer pricing, but today we will go into the objectives of transfer pricing, then the arm's length principle in transfer pricing. Do drop your comment, but let's breathe. Do subscribe so we go on. We also want to know the terms and conditions of relevant transactions. Let's set the ball rolling. Transfer pricing. Transfer pricing can be used to avoid taxes, and the methods involved in transfer pricing, and particularly how it can result in distortion of allocated profits and tax, are what we are going to look at. We will also consider the arm's length principle as a basis of determining transfer prices of related parties. Definition and nature of transfer pricing. Transfer pricing refers to the determination of prices at which goods, services, and intangible properties are transacted between persons in a controlled relationship. The underlying factor is controlled relationship. When unrelated parties deal with each other, independent market forces shape the commercial pricing of goods, services, and intangibles transacted between them. However, in transactions involving persons in a controlled relationship, the lack of independence in their commercial and financial relations can potentially lead to the setting of prices that deviate from independent commercial prices. Moreover, this results in the distortion of the allocation of profits between related parties or entities, as well as in their tax liabilities. Where the persons in a controlled relationship are located in different tax jurisdictions, the potential distortion in profits and tax liabilities of each related entity assumes a greater concern, as the difference in the taxation level in the different tax jurisdictions may lead to one or more such entities not paying the fair share of tax in one or more jurisdictions, with the related entities enjoying a tax advantage as a group. We move on to the objectives of transfer pricing. Don't forget to spend the time to subscribe, like, share, comment where necessary. So, objectives of transfer pricing. Firstly, to prevent revenue loss to the government. Two, to provide taxable persons with certainty of transfer pricing treatment in Ghana. Thirdly, to provide a level playing field between multinational enterprises and independent enterprises doing business within Ghana. Fourthly, to reduce the risk of economic double taxation. Fifth, to provide the Ghanaian authorities the tools to fight tax evasion through over or under pricing of controlled transactions between associated enterprises. Also, to ensure that Ghana is able to tax on appropriate taxable basis corresponding to the economic activities deployed by taxable persons in Ghana, included in their transactions and dealings with associated enterprises. The arm's length principle in transfer pricing. Do drop a comment. What do you know about it? The arm's length principle is the internationally endorsed standard for transfer pricing between related parties. When related parties adhere to this principle, it reflects comparability to the pricing that independent commercial entities in similar situations will transact, and therefore there will be no distortion in the profits and tax liabilities. The Ghana Revenue Authority abides by this arm's length principle and believes that this is the most appropriate standard to determine transfer price of related parties. Although the provisions of the arm's length principle are applicable to persons who are separate legal entities, but will also apply to determine the arm's length consideration for tax purposes of dealings conducted by A transaction between persons who are in a controlled relationship. B. Dealings between a permanent establishment and its head office. C. Dealings between a permanent establishment and other related branches of that permanent establishment. D. A transaction between a taxpayer and another taxpayer who are in a controlled relationship. And a transaction between a taxpayer and another taxpayer who are in an employment relationship. The Transfer Pricing Regulations 2012 LI 2188 shall be applicable, but commentaries in the OECD Transfer Pricing Guidelines may assist in interpretation where necessary. Transactions actually undertaken by the persons in a control relationship will be considered, except where the economic substance differs from its form or the structure of the transaction is not one that commercially rational independent persons would arrange. In such a case, the analysis described in this note will be applied to the substance of the transaction, or the substance will take over, the form. Then B, the structure of the transaction as would be expected between independent persons. Now let's see what applies to both tax officers and taxpayers by way of information. We are looking at the CJ's, that's the Commissioner General's interpretation of and practice in relation to the Transfer Pricing Regulations 2012 LI 2188. Taxpayers have and still have their right of objection against assessments. Yes, objection against assessments as are contained by the Act. Determination of comparability. Comparability is central to the application of the arm's length principle. A transaction between related parties is termed a controlled transaction. When assessing whether the terms of a controlled transaction meets the arm's length principle, it's necessary to compare those terms with the terms of a comparable uncontrolled transaction or transactions. The critical question is whether the uncontrolled transactions or transaction which is sought to be compared against the controlled transaction is indeed comparable. To be comparable means that none of the differences, if any, between the situation being compared could materially affect the condition being examined in the method. For instance, price or margin, or that adjustments can be made to eliminate the effect of any such differences. If suitable adjustments cannot be made, then the transactions cannot be considered comparable. The assessment of comparability can be affected entirely by the following. A. Characteristics of goods, property, and services transferred. B. Relative importance of functions performed. C. The terms and conditions of the relevant transaction. D. The assets used. E. The relative risk assumed by the persons in a controlled relationship and any independent party where the independent party is considered as a possible comparable. F. The economic and market circumstances in which the transactions take place. And G. The business strategies pursued by the related parties or affiliates in relation to the transactions. Now let's see the characteristics of the goods, property, or services transferred. Differences in the specific characteristics of goods, property, or services can often explain the differences in the European market value. Comparisons of these features may be useful in determining the comparability of controlled and uncontrolled transactions or activities. Focus should be put on the attributes or characteristics that are valued by customers, including but not limited to the intangible benefits of design, trademark, and perceived quality. We have goods and tangible property. And we have intangible property services. Now, goods and tangible property, we have physical feature, quality and reliability, availability, volume of supply you can determine, branding and trademarks incorporated into the good or tangible property. Whereas with intangible property services, look at the form of the transaction, and nature of services, the type of property, the extent of services provided, duration of protection, degree of protection, then anticipated benefits from use. Terms and conditions of relevant transaction. The terms and conditions of an arm's length transaction define explicitly or implicitly the way the responsibilities, risks, and benefits are divided between independent persons. When independent persons negotiate contracts or agreements, the ultimate price or margin agreed is influenced by the terms and conditions of the proposed agreement. For instance, of the terms and conditions that may influence the agreed price or margin include credit terms and payments. As credit and payment terms, the volume, duration, the product and service liabilities of the parties, and warranties and exchange risk. Contracts or agreements between related parties may not be adhered to as in the same way to unrelated person, and the transfer pricing analysis will apply to the actual conduct of the parties involved, where it differs from the terms of the contract or agreement. Economic and marketing circumstances. Arm's length prices or margins may vary across different markets, even for transactions involving the same property, goods, or services. Achieving comparability requires that the markets in which the independent and unrelated enterprise operates are comparable. Then, differences either do not have a material effect on price or can be appropriately adjusted if they do have a material effect. The relevant factors for comparing markets include the basis upon which you can compare markets include the size of the market, the geographical location of the markets, the extent of competition in the market, availability of substitute goods and services, transport costs, the level of the market, that's be it wholesale or retail. Documentation. The CJ, that's the Commissioner General, for the purpose of obtaining full information in respect of the income of a person or of any part thereof, and may require the person of or any other person to produce for examination or by any person appointed by the CJ at such time and place as may be determined, any documents or information as defined under Regulations 8 of Transfer Pricing Regulations 2012 LI 2188, which the CJ may require. This aspect covers the broad issues relating to the types and extent of documentation which taxpayers are expected to keep to be able to demonstrate how their methods and prices satisfy the arm's length principle. These include a general description of the organizational, legal, and operational structure of the group of associated enterprises of which the taxpayer is a member, as well as any relevant change therein during the taxable period. The group's financial report or equivalent annual report for the most recent accounting period. Those are documentation that you will need. And a description of the group's policy in the area of transfer prices, if any. A general description of the nature and value of the controlled transaction in which the taxpayer is involved or which have an effect on the income of the taxpayer. Then a description of the functions, assets and risk of group companies to the extent that they affect or are affected by the controlled transactions carried out by the taxpayer, including any change compared to the preceding period. We move on to service arrangements. Service arrangements. Intra-group service arrangements encompass a wide array of service, including administrative, technical, financial, and commercial services. The CJ, that's the Commissioner General, accepts the principles defined by the OECD transfer pricing guidelines surrounding the charging for intra-group services. However, according to the transfer pricing regulations of 2012 LI 218, three main issues must be determined when analyzing intra-group services, and they include if the charge is for a service that is actually rendered, and also if the service provides economic or commercial value to the recipients of the service, and also, moreover, an independent person in a comparable circumstance will pay that charge for the service. The OECD transfer pricing guideline sets out the main condition when considering whether a service has been provided. To check whether an independent enterprise in comparable circumstances would have been willing to pay for the activity performed for it by an independent enterprise, or would have performed the activity in-house for itself. If the activity is not one for which the independent enterprise would have been willing to pay or perform for itself, the company ordinarily should not be considered as an intra-group service under the arm's length principle. The OECD transfer pricing guidelines further require the intra-group service person providing the service to determine which services relate to shareholder activities, benefits specific group members, and benefit the group as a whole. The cost of shareholder activities are not to be recharged unless they are performed on behalf of the parent by a group company, in which case they should be recharged to the parent. These are activities performed for the benefit of the parent company in its role as shareholder and do not directly benefit the subsidiaries. Shareholder activities should include the following: cost of the supervisory board, issuing of shares in the parent company, meetings of the parent company shareholders, maintaining the share register, activities to satisfy statutory reporting requirements of the parent company, and audit of the parent company. Now, just by way of revision, let's see the methods of transfer pricing. There are 4 methods of transfer pricing commonly used to influence taxes, and these are: 1, the comparable uncontrolled price, that's the CAP method; the cost plus method, which is also the CP method; you have the RP method, that's the retail price method; and the transaction profit split method. These methods, we have discussed it in our earlier lessons. Do check on our earlier links and watch it. It's already explained in detail. Thanks for watching. Thank you.